Rohr here with an early global view on Monday, December 15th, 2014. It's currently 6:45 a.m. U.S. Central Time, and there is a lot to cover because of the intense influence of many macro factors last week that caused such significant activity, especially in the equities and government bond markets. So what does all this mean to the markets? And the first thing we saw is very interesting. We're still looking at December S&P 500. The volume has moved over to March, which you can see by this very thin trading going back out into Friday on the 30-minute chart. But hourly on the left, 30-minute on the right, indicators below. And what we can see is that this sharp markup off the U.S. retail sales number on Thursday only took the market back to trend resistance. And again, this is not drawn in here because this high was here. This is basically the resistance that was in place off this basing line out of Tuesday's major gap lower on concerns overseas that only took the market back up to Monday's failure level up at 2,060. Basically a $27 rally from the lows right to where they had to fail. Wednesday's weakness into that new low into the mid-20s support again saw this Thursday rally, but only back to the downtrend level that weakened off after lunch and led to Friday's weakness. And interestingly enough, of course, right away from back on Monday, even late in the day, the market was signaling that weakness with the hourly MACD below its lower runaway band could continue. Even Thursday's interruption was short-lived. By Friday morning on the additional weakness, this was back below that lower runaway band, showing it could feed on itself. That said, having overrun support and around the area of the old high from September around 2013, which it tried to hold early on Friday, the market did get down below 2,000. But 2,000 is the beginning of supports that go all the way back to the July highs back around the 1985 area. And that's going to be very important as we get into the March as lead contract. We're going to switch over to that tomorrow and just subtract $6 from any of these levels in order to find out where the March levels are. That's the relative spread right now. And resistance, therefore, back up at 2013 lead contract will be at about 2007. And that's very important because this market, after